Today we're going to talk about the 7 different types of income streams, and you can see how many you have, and maybe if you can start some more streams of income, because who doesn't want to earn more money, right? I'm Serena Alfaro, and I'm the founder and designer of Nueva Lux Jewelry brand, which I started 2 years ago, and in January of this year, I quit my full-time 6-figure job to focus on my jewelry business full-time. And while I was at it, I decided to learn some new ways to earn money online too. So that's what I'm using my YouTube channel for. I'm going to talk about entrepreneurship and different ways to earn money. So follow along. The first type of income stream is earned income. And that's the most common type of income that you would earn from your full-time job. Unless you're like me and you quit your full-time job. But this is the most common income stream people rely on every month to pay things like rent, mortgage, bills, things like that. But there's 6 other streams of income too. So let's see how many you have. The second type of income stream we'll discuss today is business income. So this would be the income that you earn from a business you have set up. This does not mean to be your full-time way to earn money. For instance, when I started my jewelry business, that was a side hustle, you could call it, but I was still earning business income from it. So this can be both active and passive types of income, but it's any income that you earn from a business that you have set up or that you're operating either full-time or alongside your full-time job as a side hustle. According to the American Economic Association, in 1980, the top 1% of income earners in the United States made up 10% of the total income. And by 2019, they earn 19% more than all of the bottom 50% of earners combined. This trend has alarmed economists and policymakers, and the COVID-19 pandemic may only be making things worse. So a large portion of long-run rise in income inequality may be a shift in how the richest individuals actually report their income, because in a paper in the Journal of Economic Perspectives explored how tax policies shape the way businesses are organized, which in turn changes how companies distribute economic gains to owners. So the top 1% income earner is not a public company executive or even a tech billionaire. Most of them are doctors, lawyers, or owners of medium-sized businesses. So after the 1986 tax reform, many of the wealthy group changed their businesses from traditional C corporations to what's known now as like pass-through entities, and profits for these organizations are passed through directly to the owners, which means that businesses' income fall under individual income tax rather than corporate tax. So many of the standard measures of income inequality don't reflect this distinction. So that's a pretty interesting thing. I'm going to show you a figure from this research paper that kind of gives you an idea of the change in tax policy and how that reflects income earnings. The next type of income we're going to discuss is interest income, and I'm sure you're familiar with what that is, and I hope that you're earning it, because this is the type of income you earn from things like your savings accounts. And we all know that over the past couple of years, those interest amounts have fallen significantly, but my savings account percentages actually recovered pretty well. I'm now at 1%. So as of the time of this recording, which is, when are we? The end of June 2022, my Marcus savings account is back up to 1%. I'm going to put a link for you in the comments. So if you're not earning that much interest on your savings account, you definitely want to move your money over to a more high yield savings account, because you're just earning money on your money that's sitting there. And who doesn't want to do that? So interest income, that is the third type of income stream we're talking about today. And I will link to my Marcus account so you can get a high yield savings account too. There's a lot of other options, of course. I know like Alia is supposed to be a good one, but the interest amounts change and fluctuate as the economy changes and fluctuates. And I know it dropped a lot recently, but it looks like it's recovering. So fingers crossed it stays that way. I will link to Marcus savings account. The next type of income stream we're going to talk about is dividend income. And this is the income that's paid out of the profits of a corporation to the stockholders. It's considered income for that tax year rather than a capital gain. However, the U.S. federal government takes qualified dividends as capital gains instead of income. And let's see which dividends I earned most recently. I don't like seeing that number going down. But let's see. Intel, I earned, I have some shares in them, so I got some money at the beginning of this month. What else? Ally Financial, I actually just talked about them when I was talking about the savings accounts. And then what else? IBM. What's another dividend? Brookfield Asset Management. So yeah, I reinvest most of my dividends, but that is another type of income stream that you can be earning. So if you're not investing, you should be. But I can make a whole other video about that. But dividend income, that's the fourth type of income stream we're talking about. So see if you've earned any dividends. It's kind of scary to look at those accounts now because a lot of them are in the red, but hopefully they recover. And I reinvest my dividends. I don't know if everyone else does that, but I'd rather just have that money keep making money for me. The fifth type of income stream we are discussing is rental income. And this is income earned through renting out properties. And some surprising statistics about this: 10.6 million Americans claimed rental income in their last tax filings, and the average income of a landlord per year is $97,000, and that's actually not bad because the real median household income is just shy of $62,000, and that comes from the U.S. Census and Landlordology. Mom and pop landlords own 20.5 million rental units, and that's of approximately 50 million rental housing units in the United States. Around 41% of the rental units are owned by mom and pop landlords, also known as individual investor landlords. And that means that approximately 20.5 million units are overseen by mom and pop landlords, and that comes from JP Morgan Chase. And the average landlord actually owns 3 properties. That's a lot of properties. I'm actually a renter, so I'm helping someone earn their rental income stream. And another surprising fact, half of all landlords manage their own properties. That's about 45% of all landlords. I would never want to do that. But more power to you. You're making almost $100,000 a year as a property owner earning rental income. So if you earn rental income, let me know in the comments, or if that's something that you're interested in investing in real estate and actually renting out your properties to other folks. I know actually a handful of my friends that earn rental income. So there's definitely money to be made there. Don't be a slumlord. The next type of income we are discussing is capital gains. And capital gains income is acquired through the sale of an asset such as art, stock, businesses, and loans. The income earned via this route is subject to capital gains tax, but will often be acquired as a lump sum rather than consistently over time. And capital gains, a lot of the most wealthy people are able to avoid taxation on such things. So I'm going to read this from the Center for Budget and Policy Priorities, and I'll put a link down here if you are interested in reading this article. So, a critical tax advantage for wealthy households is that much of their income doesn't appear on their annual tax returns because the tax code doesn't consider it taxable income. For example, taxes on capital gains. The increase in the value of assets such as stocks, real estate, or other investments are effectively voluntary to a substantial extent. High wealth filers may accumulate capital gains every year as their investments appreciate, but they don't owe tax on those gains until or unless they realize the gain, usually by selling the appreciated asset. This is the part that I have some feelings about. Wealthy individuals can wait to sell until it makes the most sense for them, such as a year in which they have large capital losses to offset the gain, And if a wealthy individual opts instead to pass on their appreciated assets to their child when they die, the parent dies. Neither the parent nor the child will ever owe capital gains tax on the asset's growth and value during the lifetime of the parent. This is the part that irks me. In contrast, people who earn their income from work, for example, wages or salaries, typically have income and payroll taxes withheld from every paycheck. If their tax liability for the year exceeds those withheld taxes, they must pay the balance by the following April 15th. Essentially, most of the most wealthy individuals have a lot of their wealth or how much they own is in assets like this: real estate, businesses, art, that can keep appreciating and appreciating in value. And if you're already wealthy, you never have to realize those gains. Your worth just increases. So I think that's pretty interesting. What do you guys think about capital gains? Does that make sense? Am I freaking out over something that doesn't really matter? No. The next type of income stream we're discussing is licensing and royalties. I'm sure you've heard those terms before, but let me explain the difference between licensing and royalty. And license fees are usually a fixed payment that allows the licensor to use an IP for a set amount of time, while royalties are percentage or usage-based payments due each time a certain piece of intellectual property is used. IP means intellectual property. And maybe you're wondering, WTF, I still don't know what that means. So here are some different types of royalties, the most common types, and I'm reading this from upcouncil.com. Performance royalties for the use of copyrighted music, royalties for the use of online images and artworks such as stock photography. I'm sure we're all familiar with that. Book royalties that publishers pay to the book's author. Patent royalties paid to the owner of a patented invention by a third party who makes and sells the invention. Franchise royalties paid to the owner of a business name and assets. Mineral rights paid when natural resources are extracted from a person's land by a utility company. And then finally, royalties paid to celebrities who use their name to promote a fashion line. Oh, I'm sure we can think of a few of these. So this is another type of income stream that's actually not very hard to get into. I know I follow some folks on TikTok that are artists and they license out their art, and it's on like journals and books and framed art that's sold at stores like Home Goods. So this is definitely an arena you can get into. If you're a photographer, you can sell your images as stock photography. So do any of you make money from licensing and royalties? If you do, tell me what you make, and you don't have to tell me what you earn, but I'm really interested in that. So that covers the 7 different types of income streams. Let me know if you think I missed any in the comments, and also let me know how many income streams do you have of the 7 that I named, and which one would you be most interested in getting into? I have a feeling people are probably very interested in the rental income one, especially because you realize how many people earn rental income. But let me know in the comments. Like, comment, subscribe, ask me a question. Are there any of these that you want to discuss further? And let me know if you think I left anything out. Thank you for watching.